All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, April 25th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, doing the video a little on the earlier side here today. Do have some appointments right after the bell, so trying to get this out a little early, which is unfortunate because we have Microsoft earnings, and today, who would have thought we would be down 1.4% here on the spiders. And take a look. I mean, it's pretty much we had a gap down, micro bounce there on the open, and then really just no reprieve all day long. We had a little bit of a float up around the 11 o'clock time frame that immediately, take a look at this white trend line here. That's that white trend line on the SPY, and that's where it got rejected. And we've just been in a pretty much a straight line sell all day long. No bounces, no higher highs, no nothing. So markets are under a lot of pressure here. Qs are down 1.5%, Dow down 1% there, and then let's take a look at the Russell percentage-wise, down 2.3%. All right, couple of things. So how do we digest this? So everybody's going to be focused in on Microsoft, Google after the bell, Visa as well. Could that save the market? It's possible, but I'm thinking that right now chances are much lower of that happening. So what we have here on the, Russell too, but really on the spiders, this is technical damage. So cutting through that 20 moving average, and unless we have a power surge here in the next hour, that's a failed green bar, inside bar pattern there, 20 moving average failure. And just technical damage on the Qs too. So we have now lower lows and lower highs on the daily time frame, and we are below that 20 moving average, with confirming below that 20 moving average, confirming below this pivot here, and now could be headed down to that 50 MA in this gap fill. Doesn't mean it'll go down there tomorrow. It doesn't mean it'll be a straight line. We could still get a bid off of Microsoft earnings. But right now what I see is technical damage, right? So it's okay. It would be fine if we just traded down, if we stalled out at 409, if we look at the SPX, if we stalled out at 4100, that would, everything would be fine, right? And then we could still get a bid off of Microsoft in the after hours, and tomorrow we could shoot right back up. But I think generally if the market's bullish, you want to see an attempt at an hourly higher low, and that, like I said, this has been a straight line sell all day long with no reprieve. The algos are just continuing to pound it. Now, here's the positive, I suppose, is the volume's still really light. I mean, we're at 3 o'clock and we're at 57 million shares. If we were at 100 million shares, I would say there's absolutely no chance that we're coming back here. But, there's too much damage, right? This is now, you could make a case this is a failed breakout. And more importantly, what have I been banging the drum on for weeks now? SMH, that is a breakdown. Okay, you can't, there's no way around it now. I thought they'd at least save it one more time here, but that's a big breakdown on the weekly. Now, there is some daily chart support here at 240 with that green bar low. You can see we kind of grinded up on it intraday, and that's kind of where we stalled out. We haven't really made new lows outside of nominal little prints there. So maybe maybe due for a little bit of a bounce tomorrow here, but I think we're, regardless of what happens, Microsoft, Google, I think it's probably a sell the rip. So we're probably, I would say in sell the rip mode here. Take a look at UPS. I got smoked on this one this morning trying to scalp this. Just take a look here. Big sell, and really just in a grind down all day long. No bounces there either. And that took down, what else have I been banging the drum about for weeks? Dow Transports. That's a bad sign there. Rising wedge breakdown, bear wedge breakdown, whatever you want to call it. So that is a rejection. Again, we talked about that 14.5 area. It's been struggling with that area, and a pretty good sell there on the transports. That is weak, being dragged down by UPS specifically. Another sector that we touched on yesterday that has been a strong horse is now weak. IGV. I mentioned this yesterday. I said, look, this should be popping off the 20 moving average, and it's selling. And we had a gap down today, and we're down 2 3/4. Take a look in the intraday. Just boom, straight down. Algo sell all day long. So lots of weakness here across the board. And when I see the Russell again, big breakdown there. Lost this consolidation pattern and broke down there. Tried to reclaim 175 intraday and could not do that. When I see the Russell, cloud software, semis, and the transports all leading to the downside, I'm generally going to put on the bear costume. That's really as simple as that. Now, again, could Could they save it? It's possible. I've seen it happen. I've seen them. You would have to have an engulfing reversal here tomorrow, I would think. And Microsoft would really have to have rock star numbers to fix all of those problems. But right now, it looks like a market that's scared of recession. And what I mean by that is you take a look at the ZT, that's been surging all day long. ZB has been surging all day long here. We can look over, if you just give me 1 second. I'm trying to pull up the 3-month. Even that's getting a bid here on our other screens there. But so, yields, bonds coming back in. And again, the market is worried. Now, what's driving this? Well, we had data this morning out of China that suggested growth would be weaker than expected there. So you got some weakness there. And then really it was FRC, down 44%. And, they basically had a 13-minute conference call yesterday and they hung up without taking any questions. When you do something like that, the market's going to get freaked out. So it's pretty much that simple. Market's trying to get a little bit of bounce. I would think we should get some type of relief bounce into the close, even short covering, something like that. Market's very oversold here, but very weak showing. And I just, generally, I've been saying I think we should have one more move up. But after today's move, it's just too much damage, I think. So I think right now we would probably be in a mode where we want to look for lower highs. Barring, we'll see what we get tomorrow. And remember, we have FOMC next week too, so that's something to look forward to. Very, very choppy, a choppy environment. These are shark-infested waters right now. You have to be careful here. So the Qs are coming into a little bit of support at 310. We'll see if that can hold tomorrow, but we talked about this yesterday. And even last week, we had that scenario where we had this bull flag. We came down, we put in that inverted hammer, and then another hammer. And it's almost as if this scenario is playing out again, where we had that, like today would be the 221 candle, so February 21st. I said that was probably off the table yesterday because we didn't gap down, but it's like we just kind of put in the same candle 2 days in a row. And now today, it's almost as if yesterday didn't happen, and we're kind of completing that pattern there. So we'll see if that becomes a thing. But yeah, definitely a really good sell here for the markets, and led down by important sectors. Again, the semis have been telling us this. We'll look for follow through. By the way, the VIX has been telling us that. Take a look at this falling wedge here on the VIX, up 14.5%. And I said the VIX is likely bottomed yesterday. I said I don't care that it bounced off that 20 MA. This is probably trying to carve out a bottom, and there you go. So it's nicely pushed through 19 right now. Again, to probably come off the highs a little bit, I would think, here as we get into the latter part of the day. It may have to do some backing and filling here. To get through this 19 to 20 area, you got some resistance there, but that's a good move for volatility. And again, what did I say really all last week? I said after OPEX, that's where kind of the window of risk comes in, and we're definitely seeing risk here in the market there. So technical damage there on the spiders. Let's get over to some sectors. So we mentioned the semis. Again, daily chart support at 240. If you get through that, there will be some at the 100 moving average, especially if we get down there tomorrow. That would probably give you a pretty good bid off there, but the top is in, and we're looking for lower highs now on the SMH. IGV, the top is likely in as well. Again, it's into that 50 MA. We'll see if that can give it some support. There's a gap right there at 290, so it can probably get a little bit of support, maybe hold up a little bit. But again, looks like 310's off the table, and we should look for probably lower highs there as well. Dow Transports, just big outside move, a complete collapse there. It's trying to hold the 200 moving average here. We'll see what it does in the meantime. If you lose this pivot, it's down to 13.5. Again, if the bull case is you get a huge reversal in the spiders tomorrow and Microsoft blows out. But even then, I don't see a ton of upside here. Again, you got to take this pivot out, and then you can try to get to 14,750, but that is a weak look overall. We mentioned bonds a little bit with the 2-year getting a nice bid. The yield curves are still, I'm looking at, the 2s and 10s are still inverted by 55 bips. So, it's not like that's correcting just yet, but 2-year getting a bid. The 10-year yield, that came in pretty sharply. I would like for this to decline a little bit more. I think that any downside in yields is a buying opportunity in yields, and I think the big mistake that the bond market is going to make here soon is assuming that inflation is cyclical and not secular. And I think, bonds in the near term, they're definitely going to be a risk off play, but down the road, I don't expect yields to go that much lower here. There's the 30-year, down as well, down 2% as the ZB gets a bid. But just right now, the market's acting as if, okay, if we go into recession, oh, that's it, inflation's just going to go away. It's not that simple, and it's not just a monetary phenomenon. Plus, you got to remember too, Joe Biden just announced his, and a lot of this too, like the debt ceiling stuff, like, come on, stop it, right? Like, Joe Biden just announced his, that he's running 2024. They're not going to stop spending money. They're not going to let the U.S. default in front of that. I mean, these yields, inflation's not going away. That's basically the bottom line here. But anyways, let's get over to home builders. XHB finally coming down a little bit here, down 1%. Still, holding up really well. That $70 level was good resistance, as I said. And ITB just continues to hold up, just very high on the hog here. Still hasn't even taken out this pivot there. So again, ITB holding up really well, but again, I think this is on borrowed time. VNQ, it's trying to hold these pivots here, but again, this, how much longer can they hold this 81 area? They had a fake breakdown there. You had a reversal, and now you're basically back checking to that. Again, this pattern should have played out to the upside a while ago, and it hasn't. So I do not like that there. XLF here. So we talked about this trend line and nice break through that. Right now, you're kind of just sandwiched between that 20 and 50 moving average, and you have a little bit of support at this gap fill right now. Again, we do have Berkshire reporting later this week, so that will be a big mover for XLF. It is makes up, I think, 12 or 13% of the XLF, so that can help out if they do well. But either way, financials not in good shape here. KRE, new 52-week lows. I don't see a ton more. I know it looks terrible, but I don't see a ton more downside here either. This is a lot of, if we go to a weekly, has a lot of support there, and it's not going to get taken out with, very minimal consolidation. But it's still an ugly chart, and it's not something that is a sign of strength here, obviously. KBE also very weak, gapping down today, so not good there. Broker dealers also took a big haircut, down 2.3%. Had a nice try to get an outside move up to that 50 moving average, and a pretty good rollover there. So broker dealers also under pressure. Goldman down a little bit, and Morgan Stanley down 2.25 as well. So those broker dealers taking a bit of a hit. All right, over to energy. So crude, new low, just slight new low there. It's trying to hold that 50 moving average. All right, now I can say potentially we might have a read on this. If this starts to go sideways here, it's going to go lower. That's really all I can say at the moment. We do have that big gap there that will act like a magnet the closer you are to it. But previously we didn't really have much. But if you start going sideways above support like that, it probably will turn into a bear flag, and it can go lower. So that would be my bias right now. To negate that, you get back above 80, and then you can get up to back up to that 200 moving average. But for right now, that's what we'd be looking at for crude. So crude under a little bit of pressure, and again, recession fears, that's going to drive out that kind of trade. XLE gave back everything, right? So down 1.85, it was up 1.8, I think 1.9 yesterday. Look at that, gave it all back. Still holding up a little bit on the intraday though, so you're still seeing some money flowing into this sector, whereas you look at the spiders just getting pounded all day, and the XLE still managing to hold the lows from 10 a.m. So still a strong trade, still a strong sector. Remember, Exxon, Chevron report Friday. I think Conoco as well, so that will be a driver. XOP on the weaker side, we've been talking about that being weaker than XLE. OIH back below 280, so not a good sign there. It's trying to hold that 200 moving average, but again, very sloppy pattern, and I wouldn't do anything with it. Nat gas getting a nice bid here again, up 0.5%. Does look like it's trying to close the rollover gap a little bit, so we're at 2.284 here, and then I believe June is M23, and that's actually down. So this is actually not a terrible thing when you see that rollover gap start to close into the rollover there. But nat gas getting a little bit of bid again, still has resistance at 238.3. If you get through that, then it's cleared for a nice pop there. But nat gas, at least the spot, getting a nice little pop, and then dollar index also popping as you'd expect, but still daily 20 moving average resistance. Why is this with the markets down so much? It's because the bonds are bidding. That's really that simple. If this becomes fear, then this can take off. And you'll see all sorts of, you'll see the VIX take off, you'll see gold take off, you see the dollar take off, bonds take off. But right now, it looks like the market is discounting inflation and expecting recession and deflation, which I think is a huge mistake. But for the near term, dollar is still getting a bid as a risk-off play. Still 20 MA resistance. Maybe that's a slight sign that maybe it is a fake out here on the spiders, and we can get a bid into tomorrow off of Microsoft. But I think there's just too much damage that's been done today. But either way, that's the dollar right now. Gold here still holding that 1994 area. It's tested it 4 times in the last 4 days, and actually 5 times in the last 7, right? So yeah, 5 times in the last 7 days, and it's trying to hold that. Break below that can send you down to 1962 perhaps, even that 50 moving average, but it's holding up for now. Silver was also down quite a bit this morning and got a bid off of 24.50, so held that 20 moving average there on the daily. Again, I still just think this weekly pattern is just way too overbought here. It needs to do more backing and filling. But nonetheless, it's holding up for now. Platinum getting a little bit of a reversal, touching 1080 and then coming back to the green side. This needs to consolidate, but it can go to 1200 still. Copper almost there, so we got down 2.6%. Nice trend line break, and here we are. So we're getting close, about 10 cents away from our target, 375. There's a 200 moving average there now, so not that far off now. Maybe a little oversold here. Might need to bear flag a little bit to get into that area. But looks like it's finally, I've been talking about that level probably since like the middle of February. I think it was down here when we had this bear flag. It was like the beginning or middle of February. I said like 375. It needs to go test, and it's finally getting there. So we'll see if it can do that later this week or next week. All right, over to Bitcoin. So Bitcoin, again, so this is starting to look more like a bear flag here. The more sideways this goes, the more bearish it is, and the more of a downside bias it will be to 25. We talked about this over the weekend. Maybe this was a leading indicator, right? So Bitcoin breaking that bullish formation before the spiders broke down, that could have been a little bit of a leading sign there. But again, this is starting to look like more of a bear flag. So if this starts, you lose that 50 moving average, you lose these pivots, it's going to 24 to 25 there. So Bitcoin coming under pressure as well, though, nothing terrible there on the daily, at least not right now. Okay. All right. So let's get back over to the spiders here. So it's about 3:20 p.m. We are getting I guess a tiny little small relief bounce. We'll see if we even test that 10-minute 20 MA. I would think we should. As volatility comes in, typically you get some type of a bounce after these big down days towards the end of the day. But in any case, lots of technical damage done. Again, all eyes on Google, Microsoft. They're going to have to be rock stars today to save this market here. But I think we're pretty much in basically a sell the rip mode at this point. So anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.